You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN. And become a part of the audiobook revolution.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.CFRN.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.CFRN.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Monday, 11th day of January, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our home page at CFRN.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. When you join that way, a couple things happen. Number one, you have access to the chat box so that you can ask questions and participate in the discussion. Also, going forward, each day right before the show or any time we do a live broadcast, you'll get an email that lets you know we're going live, and there'll be a link in that email that you can click. One-click access, in like Flynn. You don't have to type in your name or your mother's maiden name or your favorite pet or any of that stuff. Now, there will be days you're out of your office, away from your desktop. Point any internet-connected browser to cfrn.net/live. And there you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We also stream live during this broadcast at youtube.com/CFRN. Let's open with a word of prayer. Heavenly Father, as we, number one, God, we just thank you. We thank you for today. Thank you for life, for your blessings, for your mercy, and for your grace. As we stand at the beginning of this new year, one weekend, and so much has happened, we confess our need of your presence and your guidance as we face the coming year. We each have our own hopes and expectations for the year that is ahead of us, but you alone know what it actually holds for us. And only you can give us the strength and the wisdom that we will need in this coming year to meet the challenges. So help us to humbly put our hands into your hand and to trust you and to seek your will for our lives during this coming year. In Jesus' name we pray. Amen. All right. Happy Monday.
Amen.
Hey, I trust you guys had a good weekend. Let me give you the numbers from around the world. These are the cash markets, the indices, as they're called. And then we'll go to Michael and get a recap of what happened this morning in the live trading room. Currently here at home in the U.S., the Dow is down 55 points. NASDAQ down 88. S&P 500 down 12. And the Russell 2000 down 3. In the commodity basket, crude oil down 14 cents, trading 52.10 last. Gold up $13.50, trading 18.48.90 last. Silver up 64 cents, trading 25.28 last. That's a gain on silver of about 2.5% on the day. Remember, when you're holding the large silver contract, a $1 move in price equates to a $5,000 profit or loss, depending upon which side of the street you stand. On the Globex Open last night, we saw silver drop $1, a little more, and now it's just regaining territory lost earlier in the session. In the Asian markets, at the close today, Nikkei posted a gain of 648 points, which is interesting because it's a banking holiday, or a holiday in Japan. The Shanghai dropped 36. Hang Seng gained 30. And in the European markets at the close, FTSE fell 74. That's a little over 1%. DAX dropped 112. That's a drop of almost 1%. And the CAC dropped 44. So we have a mixed day in Asia, red day in the UK, and it's a big red Radio Monday here in the US of A. With that, we'll go to Michael, get a recap of everything that happened in the live training room. When he's finished, I'll come back. We will take a look at the big picture charts. We'll look at the daily. We'll look at our 30-minute. We'll go through the Concierge Trade Alerts, the Logic 247 alerts, all that, and answers to your questions. Take it away, Michael.
Okay, here we go. Let me drag this back up here. There you go. There.
Okay, I've got your charts locked and loaded.
All right, excellent. Here we go. All right, let me shut off my mic and clear my throat first. Okay, here we go. Good afternoon, everyone. Today is Monday, the 13th day of January, 2021. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, we made 16 ticks in crude, 2 ticks in gold, and 68 ticks on the ES. That put us up $1,030 on a morning session. Today took 2 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 14 trades today. So on the month now, we're up $3,970. That's over 6 trading days, averaging $651 per contract per trading day. I am now on my 219th consecutive trading day of getting the goal. And so far this year, we've only had 6 trading days, and all 6 of them have been green. So on the year now, same as the monthly, 3,907 over 6 trading days, averaging $651 per contract per trading day. Now, if you have not taken a free trial with us, go to the homepage here at CFRN.net. On this page, all we ask you to do is scroll down to where it says free 5-day trial. Click on that. And here, all we ask for is your name, your email, and your phone number. You can tell us the biggest training challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know you took the free trial. So you got to click on that link, okay? All right, let's get into it. All right, so gold was good to us right at the beginning, and then we stopped out, and that was pretty much it. Gold had some pretty good opportunities today. I mean, I missed a bunch of them, but it did have some pretty good opportunities. This is right at the beginning, the morning session. I missed this bounce off the BBC right here. Now, there was a question about how far away does the green line need to be from the cycle? And if the cycle is going up at a really steep angle like that, then just a little bit like this is fine, as long as you get something else confirming it up here, like close above the trend line or bounce off the BBC. But if the MA1 is blue and going straight up, and the cycle is blue and going up at a steep angle like that, any pullback below the cycle would be an opportunity to jump in that right there. Okay, so we could have made our goal for the day on that one. Then right in here was a shorting opportunity we missed. Along right here that we missed, this probably would have been a break even, maybe a couple of ticks. This would have been probably a couple of ticks. This we did get 10 ticks on. This would have been a break even had I taken it. See, I was hesitant about taking this right here because the cycle started to go up kind of steep. This one right here. The cycle started to go up kind of steep, so I didn't want to do that one. I did do this one, and it went right into dynamic resistance, got rejected, stopped me out, put me at +2. I missed that one, would have been break even. Missed that, would have been break even. I missed that. Probably could have gotten some profit on that one. And that was the first hour. Then in the second hour, right here was a bounce off the BBC for some nice profit. If you got it, I missed it. I missed that one and that one, both of which probably would have been break evens. Actually, this would have stopped out. This would have been a break even, probably, maybe a couple of ticks in profit. And that was it for the morning session. Now you can see in the break here, it got kind of messy and not a really whole bunch to trade there. Okay. Crude oil, we traded more crude today than we normally do. Now you'll notice that I don't have the euro up right now. I pulled it off because we hadn't been trading it. It was just taking up space. So I pulled it off. But a few people had requested that I do that, so I did. Now, right here, we had a bounce off the BBC with bullish separation here in the slingshot. So that was a valid long trade right there on the crude. We didn't take that one. We did take this one. One of these we got 1 tick on, and one of them we got 15 ticks on, and then we got a break even and a break even, and that was pretty much it for the crude this morning. Okay. Now the ES, we had at the end of the day we had some really nice trades on the ES. They gave us, really is what kicked us over $1,000 a contract. We started out way back here. I didn't even mark it, but it was our first trade, and it was right here. I think I marked it with the wrong thing. It was right here. We picked up 8 ticks. It was 2 minutes in, and we picked up 8 ticks on that right there. That was our first trade. We picked up 8 ticks on that one, and then right over here a little while later, let me see. There was somewhere in here we picked up 1 tick, and here we picked up 10 ticks to put us at plus 19. So somewhere in here, we picked up 1 to put us at plus 9. And then we picked up 10 to put us at plus 19. We had to break even. Then we had a 3 tick to put us at plus 22. Then we started to get those big ones at the end. You see there was one right here that probably would have been break even. That one was break even. There was a short right here that we could have taken that I didn't for whatever reason. Then on this one right here, we picked up 18 ticks. That put us at plus 40. Then on this one, we picked up 14 ticks to put us at plus 54. And on this one, we picked up 14 ticks to put us at plus 68. Those last 3 trades right there were great trades. And since then, it had all that great movement like that. And since then, it's been nothing but chop. So you really kind of want to stay away from it until it starts to trend again. Okay. The gold right now is starting to pull back. It just broke dynamic support. I mean, down close of the current bar would be a shorting opportunity there on gold. Okay, it's 47.8 down to 47.4 is what it would be. 47. No, now it's 47.9 down to 47.5 is what it would be. So we kind of have to wait and see what's going to happen with that. We do have nice bearish separation right here, and we did break dynamic support, so that should act as resistance. If we get the down close on the current bar, that would be a shorting opportunity on gold. Direction momentum trend indicator. It's been around since 2010, Ryan. I was looking at something with it over the weekend, and I wanted to see it in real time today. It's been in the toolbox all these years. We just haven't taken it out of the box for a while. And yeah, down here at the bottom. Now, what I'm looking for with the DMT is for price to penetrate from the bottom. So when it breaks into blue from the bottom like this, that usually means you're going to have a little bit more in the trade, a little bit more run in the trade. And so if you couple that with what your DOM says, and what the charts are telling you up here, and what the what the slingshot is telling you, then it usually works out to be something pretty good. It's not anything I really want to jump into with everybody right now, because I just want everybody to understand the basics first, and then we can go into other stuff like that, and other trade setups too. Okay, but right now the markets are having trouble right here. Gold should go down from right here because of a bearish separation. It should go down, and what should happen is this green line right here, this, well, whatever color it is, magenta line, should go up and penetrate the red right here, and that would give us more room on the downside, or would suggest that there is more room on the downside. Okay. And then I would go and look at my DOM and see what my DOM says. And right now my DOM is telling me that gold wants to get down to 46.5. 46.5. So that would be down here below the prior swing low. And I would be okay with that. So that's what that's all about. Okay. All right. So those were the markets today. We had a really active morning session, and I mean all the other stuff going on in the background too that was just made it even more active. But anyway, if you have not taken a free trial with us, go to the homepage at CFRN.net. On the homepage it says free 5-day trial, no credit card required. Just click there and fill out this little form. All we ask for is your name, your email, and your phone number, and you can tell us Speakers Training Challenge so we can tailor one-on-one training just for you, and we really do the one-on-one training. Hit the send button. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click that link, we don't know that you took the free trial. So you got to make sure you click on that link, all right? All right. The spreadsheet, that's what I was thinking. Okay, we'll go with the spreadsheet one more time really quick. Today, as I said, is the 13th day of January, 2021. Made 16 ticks in crude, 2 ticks in gold, and 68 ticks on the ES. Put us up $1,030 on the morning session. That's one contract in 2 hours. Today it took 2 minutes and one trade to get to the goal for the day. We're up $100 a contract, and we took a total of 14 trades. On the month now, we're up $3,907. So for 6 days, averaging $651 per contract per 2-hour trading day so far this year. We've gone 219 consecutive days now since having a down day or not making our goal for the day. And so far this year, we're only 6 days into the year, and all 6 of them we got our goal so far. Okay, so on the year now, 3,907. So for 6 days, averaging 651 a day. All right. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yes, sir. I am ready.
Okay.
And there we go. All right. Recap of the recap.
There we go. Today it took 2 minutes and 1 trade to get to $100 contract.
Good job.
Thank you.
All right, guys. Much happening. We'll get into the individual alerts here in just a second. Just want to jump to the daily chart so that you have everything in perspective for everything that we'll talk about here in the next half hour to an hour or so. This is the daily S&P 500 E-mini Futures. This is the all-time historic intraday high and the all-time historic closing high put in on Friday. The intraday high was 38.24 half. The closing all-time historic high, 38.22. Now, we've got an inside day going on. And what that means is Friday's high was higher than today's high, and Friday's low was lower than today's low by 1.5 points. Yeah, by 1.5 points. So we have resistance overhead at Friday's high, and last night in the discussion group, which, by the way, if you're on the trial, and even if you're already a member and you have not tied into the Telegram discussion group, okay, you're missing so much, because we talk a lot in there about the markets, about the strategy. We share charts, talk about the alerts. A great group of people. So you're missing out on some good conversation and the ability to learn above and beyond what you learn in the live training room, during this show, doing workshops, etc. Now, there are 2 discussion channels. Well, there's 3 actually. One for members only, one for the general public, and then we have a channel called Breeze. That's where we go when we just want to shoot the breeze or talk about anything other than the markets. If we want to talk about politics or the weather or sports or music, we've got an app for that. Okay? All right. So last night in the discussion group, we talked about, this was right after, shortly, and remember, we gapped higher. Let me show you that gap. You can see it better on the 30-minute. This was Friday's close. We had a 30-minute doji, and I'm sorry, we gapped lower. That's what I meant to say. We gapped lower on the open, and we did not fill the gap. We attempted to fill the gap, which led to a couple of stop outs, and I'll show you those here in just a moment. So, in the discussion group, we talked last night about the place for the market to find support would be at Friday's low, which also lined up with the blue and climbing indicator. Now, the line that changes from blue to red and back to blue, the official name is CFMA1. I refer to it as red and falling, blue and climbing. One's bearish, resistance, the other bullish, support. Okay? So price comes down. We expect that area to be good support for a couple reasons. Friday's low, blue and climbing, and the step line. But wait, there's more. This swing high intraday and this swing high intraday. So you got 1, 2, 3, 4. You got basically 5 good reasons for the market to find support exactly where it found support. I hope that helps you to understand that there's no magic in what we do. There's no voodoo, no witchcraft. Everything is based on logic. That's part of the reason why our around-the-clock Emini alert service is called Logic 247, because the alerts are not based on any kind of secret that we've uncovered. It has to do with applying logic to these markets, which have operated on the same underlying principles since the inception of the markets. You have buyers on the bid, sellers on the ask, and price channeling back and forth all day long for the entire session. And if you're a futures trader, around the clock. You'll hear people say that the market went up because of this, or the market, fell because of this reason. The commentators on TV and radio and the internet are always giving you some kind of reason that the market did something. Here's the truth. The only thing that moves price is order flow. What is order flow? Order flow is buyers and sellers in the marketplace making buying and selling decisions. Now, normally this is 10 levels deep. I click something and set it to one level, okay? But normally this will be populated 10 levels down, 10 levels up. It's the decision made. Now, these are retail traders, these are institutional traders, okay? But those decisions, there's more buying pressure than selling pressure, price is going up. There's more selling pressure than buying pressure, price is going down. It's all very logical. Now, the reason most commentators and vendors obscure that basic logic with all kind of fancy stuff, from indicators to oscillators to algorithms, is if they just told you the truth, you wouldn't stay tuned into their channel very long, because there'd be no drama. And if the vendors showed you the underlying principle upon which markets operate, and you understood that, they wouldn't be able to sell you one indicator after another. Oh, a new breakthrough discovery, the secret your broker doesn't want you to know. It's all such nonsense, and it really insults your intelligence. And that's something that we promise to never do. We'll never insult your intelligence. If you decide to become a member here, you don't have any upsells. We have one thing. We have the CFRN Passport. And the Passport includes everything we do. From the live training room in the morning, to the private one-on-one mentoring, to the methodology that we use, to our indicators, and the alerts. Everything. Everything we do. So we always start with a daily chart because we want to get some high-level visibility. So if you've been around, you've heard this analogy before, but for the benefit of anyone who's new, let me just share this very quick. If you walk outside of your house and stand on the sidewalk, if you look to the left, you can see the end of the street. If you look to the right, you can see the end of the street. Coast is clear, right? Think of that as a fast time frame, like a range chart like we use in the live training room, or even maybe a 5-minute chart. If you climb up onto the top of your house, now you can see the entire neighborhood. You have more visibility. And if you had a chopper and could take off from your roof and hover up a little bit, you'd probably be able to see your entire city from horizon to horizon. Now, if you're standing on the sidewalk in front of your house, 5-minute chart, you would have no idea that 3 miles away there's a band of angry marauders headed your way with plans to pillage your village. You wouldn't know that you'd be out on your sidewalk, whistling a tune, sweeping the sidewalk, just glad to be alive. And even if you climbed up on top of your house, you might hear something in the distance, but you don't have enough elevation to actually see. Now, as they get closer, once they breach your neighborhood, you would be able to see them from your rooftop. But if you have the benefit of hovering in that chopper, you can see them miles away. So that's why we start with the daily chart. We want to know where the important prices, important areas are. We want to see as far as we can see. Now, yes, we could go out to a weekly, we could go out to a monthly, but for our purposes here, the daily does the job. So the daily lets us identify important resistance overhead and important support below. And price came down last night, right to that important support, and bounced. It is sitting at a weekly trading zone right now, 3807/3808. Our weekly trading zones, which we've published since December 14th, 2009, they come out every Monday morning to our members at 6:15 a.m. Eastern. Think of them as fixed support and resistance. Once we publish them on Monday morning, they don't change. They're carved in stone for the entire week. The indicators, which we only use a couple, think of those as dynamic support and resistance. And I want to refresh this chart. There we go. Now, I already talked to you about the red and blue line. The green line is called the BBC, Bull Bear Cross. When price crosses above the green line, we're bullish, we anticipate higher prices. When price crosses below it, we're bearish, we anticipate lower prices. We closed above the BBC back on November 4th, and we have closed above the BBC every day since. There's a couple of days where intraday we spiked below it, the buyers came in, drove price right back up, and again, and again, and again. Now, because we've been putting in a succession of new all-time historic highs, we've been using the Fibonacci price extension tool to plot where price will find its next area of potential resistance. And so this is when price hit the 24% extension, the 38, the 50, and the 62. The next Fibonacci price extension overhead is at the 78. That price is 38.78. Now, not everyone's familiar with Fibonacci price extensions, but it uses the same math, the same 14th century math, as Fibonacci price retracements, the golden ratio. And that's not magic. The golden ratio, you'll find that in nature, you'll find it in a flower, in our DNA, in a pretty woman's face. I told you last week, if you don't know a lot about fibs, you don't need to spend a lot of money on expensive software. I can teach you how to use the free tools that come with your trading platform to do the job you need to do. Okay? Now, a Fibonacci price retracement, we go from the low to the most recent swing high, and we're looking at just the last leg up. The low was put in October 30th. The new high put in Friday. And so the Fibonacci price retracement, the most shallow Fibonacci price retracement from where we are now, is the 24, which is right here. Okay? So I've got both Fibonacci price retracements on this daily chart and Fibonacci price extensions. I've got lots of arrows and shaded areas that I've talked about on different daily shows, so I'll clean this probably every couple months. I sort of purge the chart, clean it up. But those who follow along every day will remember when we talked about this and this, and this, etc. Now this 24% retracement, that's the shallowest area that we would expect price to retrace to once buyers throw in the towel temporarily. We've already seen support hold at blue and climbing. So the next time price comes down, we will expect blue and climbing to hold again until proven otherwise. Once price gets below blue and climbing, the next logical spot for the market to find support is at the BBC, the bull bear cross, and then below that, the 24% fib. Okay, now we go to the 30-minute chart. This was the open right here last night. We closed Friday with the 30-minute doji. A doji simply means that when this 30-minute candle opened right here, price ran up, price ran down, but the 30-minute time period, the 30-minute candle closed at the same price it opened. Now that's always a sign of indecision amongst buyers and sellers. When it's in the proper context, see, we had almost a parabolic move straight up. So to catch that doji right there, that's bearish. That tells you there's a very high probability that the market is going to do exactly what it did. Okay? We gapped lower. We tried to rally. We opened here last night. Buyers ran us all the way up to here, to the low of Friday, or to the low of the last 30-minute candle on Friday. And when they couldn't take us any higher, they backed off. It takes financial commitment for markets to rise. But when buyers realize that they've hit a price point that they can't overcome, they just stop buying. And when buyers stop buying, sellers realize that buyers have stopped buying, and then they come out of the woodwork and take price down. When price gets back to an area that buyers perceive as being a value area, they'll come in, they'll drive it up as far as they can. Now I've highlighted this area where the bearish cross took place last night. That is an important price, important area. Buyers tried to rally us up through it last night. Couldn't do it. We then dropped to last week's weekly trading zone at 37.78.79. Another doji. The market turned. Now, not all dojis are turning points, but at most turning points, you'll find a doji. So doji sends us down to last week's weekly trading zone, where we get a doji. That happened at 9. This was the 9 a.m. candle this morning, 9 a.m. to 9:30 Eastern. Buyers came in, drove us back up to the BBC, and then we got back to that same area for resistance. So it took 30 minutes, an hour, 2 hours, 2.5 hours. Finally, this candle looks like it has the ability to close us above this area. In doing so, that will open the door for us to go and challenge the Friday high. Now, the number that I gave everyone in the discussion group last night was 38.12. I said I want to see price print 38.12 in order for our sentiment on this session to go from bearish to bullish. At 38.12, we'll have a window of opportunity. If buyers keep buying, remember, when they stop buying, price will deteriorate. So that's the high from last night. And 38.12. There's 38.13. Good enough. So window of opportunity overhead, 38.13 up to 38. Call it 38.20. Okay. That's a nice 7-point move. But I would encourage you to exercise extreme caution right here, right now, because if buyers sense they're not going to be able to continue to push this rock uphill, they will stop buying. Sellers will come out of the woodwork. Down we go. Now these blue lines that you see on the chart, those are this week's. These are the new weekly trading zones, 2 of them. 3786/87, and then down here 3765/66. Okay. The other zones are from last week. You'll notice that on Friday we came right down to the weekly zone at 78.79. That's where buyers took control, drove us up. And then this morning we came right back down to that same area, so we now have a double bottom in place here on the 30-minute chart. Look how far buyers were able to rally us Friday off the zone. So when price comes right back to that same area, buyers see that as a gift. Now when I say buyers, I'm talking all buyers, retail and institutional. But it's really institutional buying that moves markets. But that's part of order flow. Remember, the only thing that moves the market or stops the market is order flow. This little dotted line and this little green line on my chart or anybody's chart has no power over the market. It is the decisions made by buyers and sellers that move price and cause price to stop right here. Okay. The high on Friday was 38.24 half. No one, not institution or retail, was willing to pay 38.24.75. If there had been, that would be the high. But at 38.24.50, buyers sensed they couldn't push that rock any further up the hill, and the session was about to close, the week was about to close. And so if you had been in this rally all the way up and you're about to head into the weekend, are you going to carry this position over the weekend, not knowing what kind of news might come out that will affect the markets when they open Sunday night? Probably not. So you take profit. And that profit taking caused us to gap lower and open way down here. But buyers are pretty optimistic, forever hopeful. They tried to drive it back up and keep this move intact, but they weren't able. If from this point buyers can keep their pedal to the metal, we get to this area, 38.13, then it becomes a high probability that they'll be able to push it at least to 38.20. Okay. Now, I don't know what's going to happen next. Neither do you. Neither does the person that sent you that very clever email, or the person who wrote the ad copy for that very clever website that you just visited. Now, they often try to convince you with their clever ad copy that they do know what's going to happen next. But if you've read Genesis, you know that God did not give Adam the ability to change the past or to know the future. Not man, not machine, nor algorithm can know the future with certainty. What you can know, once you understand market structure, once you understand the underlying principle upon which markets operate, you can know with certainty what the next high probability move is. Keeping in mind that 20% of the time, the market does not do the next high probability thing. Why? Order flow. Buyers and sellers reserve the right to change their mind at any time. Okay? which leads us to the Logic 247 alerts. And I'll drag those up on the screen. Last night at 6 p.m. Eastern, that started week 128 of Logic 247. Last week was week 127. Last week we issued a total of 84 alerts. 9 never triggered. So we had 75 actionable alerts. 4 got stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure, using a simple 3-step method that I teach all of our traders. So last week, for the entire week, we saw 5% of the actionable alerts get stopped out. That is not a typical number. Over the last 127 weeks, we have averaged 20% getting stopped out. Now remember, I just said, while you can know with certainty what the next high probability move is in the market, 20% of the time the market does something other than the next high probability thing. So last night when the markets opened, the time you see here is Mountain Standard. The messaging client that we use is Telegram. It's free, it's fast, it's secure, no advertising, no pop-ups, no banners. Okay? Telegram reads the clock on your computer, so if you're on the East Coast, it'll show East Coast time. If you're on the West Coast, it'll show West Coast time. The first alert coming out of the gate last night was a gap fill on the S&P. Now the idea of a gap fill is exactly how it sounds. We closed here on Friday. We opened here last night. Now, on index futures, S&P, Dow, Russell, NQ, what we've demonstrated and seen over the last 127 weeks is that gaps on Sunday night almost always close. Typically within a couple of hours, almost always within the first session of the week. And sometimes they don't, but that's a rare occurrence. And so as you can see, our gap fill trade didn't quite get us there. The actual alert was 38.20, initial target 38.22. And we got to 38.2075. Buyers couldn't push that rock any further. And you see what happened next. Okay? That's an example of the market not doing the next high probability thing 20% of the time. Now we had a gap fill on the Dow from 31,000 to 3120. That one filled. Gap on the Russell did not fill. Tried, but failed to get there. And same with the NQ. We have this long still waiting. Dow long has not triggered yet. We also haven't written it off yet. It's still in the wings waiting to be triggered. Russell, NQ. Now here's a short on gold. The way you read the alert, this is alert number 6,150. This is the symbol, gold. S means sell. Sell 1843 with an initial target of 1842. Potential support at 1840. And then potential support at 1830. Let's look at gold for a second. Let's go to the open. This was the opening candle last night. and price dropped to 18.17. Now, at the time Valerie did the recap, price had only dropped to 18.41.40. So we like to do that. We like to keep the recap as current as we can. So every couple hours, she'll go through the alerts, and any that have triggered, she gives them the thumbs up. That means it at least made it to the initial target. But this was an entry at 43, then 42, second target, potential support, third target, potential support. So did we fulfill the entire thing from 1843 to 1830? The answer is yes. Gold pays $100 a point. So that alert was a $1,300 per contract trade. Again, this is the opening candle last night. So there's 1 hour, 2 hours, in 2.5, almost 3 hours. We dropped all the way to 18.17. Now 18, hang on. 18.43 minus the swing low at 18.17. That's a 26-point drop. Gold pays $100 per point. So this entire move, it exceeded the alert. This move was worth $2,600 per contract traded. If you've earned the right to trade 10 contracts, then it becomes a $26,000 move. If you become a member with us, you will not be trading 10 contracts coming out of the gate. We don't even want you trading live when you sign up. First, you need to learn the strategy and the methodology. We want you to trade in the simulator or the demo account until you've put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, then our blueprint will give you the green light to go live with just one contract. Once you go live, you have a new goal. Your new goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will give you a green light to add a second contract with the profit you earned trading one contract. The blueprint will tell you when it's time to add contract number 3, number 4, number 5. There's no get rich quick overnight. It's a process. Welcome to the process. Following the blueprint, it'll take you at best a year to work your way up to 10 contracts if you stick to the blueprint. I highly encourage you not to try to cut to the head of the line, because it probably won't end well. Be patient. Ask yourself, is it worth being patient for a year to earn my way up the ladder? Adding contracts only with profit I earned in the market. Is it worth being patient for a year, or as long as it takes, to earn the right to trade 10 contracts? Because again, for the 10 contract trader, that's a $24,000 drop. Not a bad wage for a Sunday night. Now, getting out at a swing low or a swing high is difficult business. Because again, since we don't know what's going to happen next, we have no idea this is a swing low until well after the fact. We do have what we call the exit signal. Now, the exit signal is on this move down. You'll notice the step line is on the left side of red and falling. And then as the move starts to run out of steam, the step line crosses over red and falling. So on a short trade like this, the first green candle that closes above the step line after it crosses over That is the exit signal. So this candle, the closing price is $18.33. Now, an exit signal is never going to get you out at the swing low or the swing high. But it does a pretty good job of getting you out somewhere in that neighborhood. Okay, the alert that we're talking about, 1843, was the entry. So, if you didn't get out at the swing low, the chart told you you really should consider taking your profit here at 1833 while you still have $1,000 per contract profit in the trade, or 10 grand if you're the 10 contract trader. Okay. Now, this looks kind of ugly. Wow, I gave back so much. Yeah. You can exit anywhere you want. It's your trading business. It's your decision. Okay? But since you can't know the future, our fallback plan is the exit signal. Okay? Now, the final target on the alert was 1830. The exit signal printed at 1833. So if you were just trading the alert, perhaps you got out at 1830. That's $1,300 per contract traded. So when you see this dollar amount and you see this number up here in brackets, that's simply where the market was at the time recap was done. Here's a short on silver, $4,575 per contract traded. Remember, if you're holding a large silver contract, which requires $15,000 in margin, a $1 move in the price of silver has a value of $5,000. Profit or loss, depending upon which side of the trade you're on. If you were short 25.28, now let's see on silver where price ended up. Okay, there is the Globex open last night. The alert said to be short 25.28, which is right there. And then the final target on that silver was 24.52. The swing low was 24.36. So again, this move in silver exceeded the alert. Next, now because up above you saw that we had a long on the S&P that never triggered, when it began to look like that we might not trigger that long alert, we hedged that by putting out a short alert. This alert said to consider being short 38.03, initial target 38.01, potential support 37.93, then 37.90, and then the weekly trading zone at 37.78/79. So now let's look at the S&P. There we go. That's the opening candle last night. So the entry was to be short 38.03, which is right there. And then the final trade to target was 37.78/79, which is right there. So from 38.03. Now what I want you to see, and I know there's a lot of stuff on the chart, so it's real important that you understand this part. I'm going to make that line red so it stands out and you can see it. Okay. Alright, so the alert said to sell 38.03. Price rarely travels in a straight line. Important prices, important areas are almost always tested. Once we have an alert trigger, it is a higher probability that it will trigger again, and maybe even again, than not. So from 38.03, we dropped to 37.92. That's 11 points at $50 a point, $550 per contract traded. Price reverses, goes back to the trigger, and drops again. This time we dropped to 37.90. 13 points at $50 per point per contract traded. And then price gets back above the trigger and drops again. And then we pull back into the BBC. When we approach the BBC from below, we expect it to be good resistance until proven otherwise. But we consolidate it here. Price gets pinched up between the two indicators. Then we close below. Then we open and close below. And so selling the open of this candle at 37.96 took you right down to the final trade to target on this trade at 78.79. So if we say 38.03 minus 37.79, that gives us 24 S&P points at $50 per point. It's $1,200 per contract traded. Then, remember we talked about a doji at the top and a doji at the bottom. We rally up, we get back above the trigger and drop, back above the trigger and drop, back above the trigger. And notice here, you get these small candles. Okay, this was a wide-ranging candle here at 11 a.m. Eastern. We go small, and we go small. This is our first candle that closes above this area that we expect to be good resistance, and which was good resistance here, and here, and here, and here, and here. Now, what are buyers going to do at this opportunity? They've got to take out this high. The market just created an obstacle in its own path. This candle did not close at the high of the 30-minute period. We reached up, and then we closed off the high. We opened here. We're 9 minutes into the life of this candle. And obviously this is not a market on fire right here. Now, if you look at volume, if I open this up so you can see volume. And by the way, volume does not factor into my decisions. I think I can get it up. Okay, there we go. So in the last 9 minutes, we've traded 9,000 contracts. There's a little bit of a green body on that candle. So buyers are buying, but if they can't move price, if there's so much selling pressure that they can't move it up, what will they do? Will they just keep buying forever, throwing their money away? No, they'll stop buying. And when buyers stop buying, price starts to drop. And when that happens, sellers come out of the woodwork, take it down, and take it down. So this is a critical area. We want the market to prove itself. I want to see buyers so committed that they take us up to 38.13, and then I'll issue an alert to be long, the final target up around 38.20. Actually, the weekly trading zone up there is way up at 38.36. Okay, so that will be on every long alert. The final trade 2 target is the weekly zone above, and on every short alert, the final trade 2 target is the weekly zone below. All right. So if buyers keep buying, we'll have an alert here. If buyers fail to continue doing what they've been doing, buying, then price will come back to the BBC, which on a pullback, we expect that to be good support until proven otherwise. Pullbacks to the BBC hold more often than they don't. So we'll be patient. If buyers come in and this turns out to be good support, we'll get another leg to the upside. That would give us a window of opportunity here. But that window doesn't even exist until the pullback, okay? So I'm going to take that right off. Now, the only other option is that the pullback to the BBC doesn't hold, okay? We have a trade for that. By the time you and I talk tomorrow on this radio program, we will have either triggered this window or this window. And a whole lot of other stuff will have happened as well. Just remember tomorrow when you come back to the show, one of these two windows will have triggered. And if there's follow through, it will have made it to its target. This one here is going to be, if this is what comes to pass, 37.94 down to at 37.91. Now, when this triggers, if there is tremendous bullish momentum, in other words, we're talking about, a candle on fire, and you can just trail right on up behind that thing until it runs into last week's zone or this week's zone. This week's zone overhead above 86.87 is 38.07. /08, and then after that 38.36 /37. So the blue lines you see on the chart, those are the zones I issued this morning at 6:15 a.m. Eastern. Again, we've issued these zones every week since December 14th of 2009. So the gray is last week's zone, 32.33. This week, 36.37. We're at a weekly trading zone right here, right now. So we get through this resistance at the bearish cross, and then we run into a zone. Only 3 things happen at a weekly trading zone. The most likely thing to happen is this: consolidation. Second most likely thing is this: rejection. By rejection, what I mean is when this 30-minute candle closed, the only thing left touching this zone was the wick. Price was rejected. So the most likely thing, 70% of the time, consolidation. Second most likely, 20% of the time, rejection. The third and least likely, but it happens, is the slice. That's when price slices through a zone like it's not even there. This was not a typical move, because what typically happens when we slice through a zone, as the move runs out of steam, price will retrace back to the zone it sliced through and then continue in the direction of the slice. This market just had so much bullish momentum, it never made the pullback. Now, I said we have, so we know we talked about the short alert 3803. Again, these alerts come out around the clock, 24/7. The markets, Globex markets open Sunday night, 6 p.m. Eastern. They remain open till Friday afternoon at 5 p.m. Eastern. There's a 1-hour break every day from 5 p.m. to 6 p.m. Eastern. So tonight, or this afternoon at 5 p.m. Eastern, the Monday session officially ends. At 6 p.m. Eastern tonight, the Tuesday session officially begins. Okay? An alert could come out at 2 a.m. or 2 p.m. We have traders around the globe. So our day session is their night session and vice versa. Futures follow stocks, not the other way around. The term futures kind of, okay, that's where stocks are headed. No. Futures are tracking the stocks. So when Globex opens, you have Asia trading their day session, futures follow, and then at 3 a.m. Eastern, London opens. Traders in the UK are buying and selling stocks. That's their day session. Futures are tracking it. So we follow the sun from Asia to London to Wall Street. 9:30 a.m. Eastern is when Wall Street opens. U.S. traders start buying and selling stocks, and futures continue to track. Okay? We love futures because we can trade around the clock. That's especially beneficial for someone who's new to trading. You still have a full-time day job. You aren't able to trade the day session because you're at work, but you can come home, have dinner, spend time with the family, and then however much time you have to devote to learning your new life skill, trading, you have these so you know what to do. Now, in the morning, from 9:30 to 11:30 a.m. Eastern, Michael is teaching you our methodology and strategy. See, our goal is not to just give you these high probability trades to make money off of. That's not the point. Of course, you can, but in the beginning, you want to trade in demo, simulator, until you learn the strategy. But the idea is that you learn to find this opportunity yourself. Now, I'll use the trade school analogy. If you wanted to learn how to be an automobile mechanic, you could probably take an online course with lots of videos. There's an instructor up there taking apart an engine and putting it back together. And you could watch that video 1,000 times, and it would not be as meaningful as if you actually had an engine sitting on your desk, and while that video's playing and that instructor is taking the carburetor off. I don't think cars have carburetors anymore, but anyway, that's how old I am. But you're watching the video, the instructor says, okay, now here's how you take the carburetor off. And so you actually do it because you got an engine right there in front of you. Take it off. And he's like, okay, now here's how you take the carburetor apart and clean it. So you take yours apart, you clean it. Now, where's the better education going to come from? Just watching the video of the guy taking apart an engine and putting it back together, or the scenario where you're watching and doing, watching and doing, watching and doing. Pretty soon, you don't need the instructor to show you how to take apart the engine and put it back together. You can do it blindfolded, practically. You follow me? That's our educational model. We teach you how to do it, we show you how to do it, and then we give you real world examples live in real time. Every time I put out an alert, Telegram, unless you have notifications turned off, every time I put out an alert, your phone, your tablet, your PC, or your Mac's going to make that Telegram sound, dee-dee-dee. Now, when you hear the alarm, it's not a call to trade, it's a call to go look at your chart. I know some traders just trade the alerts, but you're only harming yourself, or you're cheating yourself out of the full experience. Because remember, the idea is that you learn how to do this yourself. Because maybe Michael and I won't be around forever, you know, to teach you and hand you these alerts. So perhaps it's a good idea to pay attention, trade the alerts, so that when he and I do decide to put our feet up, you have learned how to trade. You have learned how to find these windows of opportunity in the market yourself. Again, no secret, no magic. It's all based on logic. How long does it take a person to learn? Well, every person's unique. The more questions you ask, the quicker you're going to get there. That much I know. Let's see what I got in the chat box. Williamson asked, if we have an alert, ES 3803 short, can we take this anytime during the day? That's a great question. Yes, based on market structure. So not all triggers are created equal. And that's such a good question, because when I issue an alert, I build in enough time for you to finish what you're doing, get to your computer, look at your charts, and put the trade on. But let's say price is climbing, so I put out a long alert, or price is falling, I put out a short alert. I've built in this time. But let's say price just doesn't go straight to the trigger. Maybe it drops a little more, and then it rallies a little bit, then drops a little more, and rallies a little bit. So by the time it actually triggers, market structure may have changed. So again, that's another reason you want to look at the chart before you actually place the trade. Because you have to see what the market structure looks like at the time of trigger to be able to effectively place your stop loss, because we don't want to risk more than $300 per contract per trade. And that requires you looking at the market when it triggers to know where to put your stop. The chart will tell you where to put your stop once you know how to ask and how to see the answer. And then Keith asks, and Williamson, I hope that answers your question. If not, just type in another question and I'll get to it. Keith asks, in general, what times throughout the day does the market slow down and increase movement? Okay, great question. The busiest time of the day, and I'll show you how you can figure this out on every market. Okay, I just brought up the volume profile down here on the S&P 30-minute. Now, let's see if I can open it up anymore. Yeah, okay. Now, right here, the biggest candle of the day will be that 30-minute period from 9:30 a.m. to 10 a.m. And if you hover over it, on this day, which was January 8th, I guess that would have been Friday, the first 30 minutes of Wall Street, we saw 152,000 contracts exchange hands. And then here's 10 a.m. to 10:30, and we saw 118,000 contracts trade. And you'll notice that each day looks kind of the same. You can see where volume trails off, picks back up. Here's today. So there's the big candle at the open, 191,000 contracts. The current 30-minute candle, we've got 5 minutes left in the life of this candle. 27,000 contracts have traded. So what about overnight? Well, you just hover. Okay. At 4:30 a.m. Eastern, 4,800 contracts. 5 a.m. Eastern, 5,000 contracts. From 5:30 to 6 a.m., 4,970 contracts. If we go back into last night, let's go back, 4,800 contracts. Next half hour, 4,800. Next half hour, 3,100. So at the beginning of the Wall Street session is going to be your busiest time. Then things sort of trail off into lunchtime. Most days we'll see the markets pick back up between 2 in the afternoon and 4 p.m. Eastern. Now, Wall Street, stocks stop trading on Wall Street at 4 p.m. Eastern. Futures continue to trade for another 15 minutes. Then there's a 15-minute break. Then there's the final 30 minutes from 4:30 to 5 p.m. Eastern. Typically, not much happens during that 30-minute period. That would be this doji from Friday. That's that final 30-minute period. And then the whole market goes dark for an hour. 6 p.m. Eastern is when the market opens. Now, Sunday nights, because the market's been closed for a day and a half, there's usually more volume on the Sunday night open than there is on the Monday or the Tuesday open. Now remember, the Tuesday open happens Monday night. The Monday open happens Sunday night. So let's zero in on, let's go back, this is Friday. So let's go back to the Globex open Friday night. Almost there. Come on. All right, right there. So Thursday night at 6 p.m. Eastern. Thought I had it. Well, you get the idea. Come on. About an hour after the Globex open. And so now you can do this with any market. You can, I've got it broken down by 30-minute candles. You can break it down by hourly. If we just shift this to hourly. And we can see what happened during this hour, this hour. Now, right there, that's the opening candle, Thursday night. In the first hour, 8,700 contracts traded hands. Gold, silver, all the major markets. Williamson, I hope that answered your question. Keith, I hope that answered your question. And if anyone else has a question, by all means, put it in the chat box. Let's look at the Dow here. Now, if this looks an awful lot like the S&P, number one, you got a good eye. And number two, the four major indices, S&P, Dow, Russell, and Q, they're pack animals. They tend to travel together as a group, not in lockstep, but the same general direction. Okay, if you got one moving up on most days, the other three will be moving up too. You know, the others may be a little bit ahead of the S&P, or they may be trailing the S&P. No one market moves first every day. Life would be simple if that were the case, but it's not. So don't waste any time and treasure trying to figure that out. Now, I won't go through every one of the Concierge Trade Alerts because they all, they all bore good fruit. But I will just cover the Dow here real quick. The long side of the Dow is 31090. That's your forward guidance for the entire session. And on the short side, for the Dow, it was 30885. Now, remember I said important prices, important areas, almost always tested. So here's the first trigger. Nice trade. Then price reaches up to 308.77. So it actually got 20 points above the trigger, dropped again. So you had two opportunities to trade the one alert. Again, when an alert triggers, there's a higher probability that it will trigger multiple times than not. Also, what you'll see often is that price will march right up to a weekly zone, turn and head the other way. Walk right up to the other Concierge Trade Alert, turn and head the other way. These are important prices, important areas based on historical price action. The Logic 247 alerts, the Take Action alerts, are based on current price action. And historic and current point you in the same direction, that's usually a pretty good opportunity. Okay, Michael got a question. Alert number 6162, short on the NQ. Let's take a look. Go back to the alerts. Number 6162. Okay, hopefully you have access. If you're on the trial, you should have access to the alert channel. When you see a thumbs up, that means it at least made it to the initial target. So let's go to the NQ chart and take a close look. Okay. Now we need to see what time that alert got issued. If you hover over, now where it says edited, that's when Valerie came in and did the recap. At the time she did the recap, price had dropped to 28.92. Okay, so it was 9:52. Oh no, 7:21 a.m. is when I put this alert out. 7:21 a.m. So that was right before the Wall Street Open at 9:30. Because remember, this is showing Mountain Standard Time. So we're going to go look at the 9 o'clock candle on this chart. 9 o'clock, right there. So let me open it up so everybody can see it. Okay, so it was during the life of this candle that alert came out, and the alert was to be short 12.904. Come on, baby. $12.904. Okay, and so the swing low was 12.892. See the pop up 12.892. So if we take 12.904 and we minus 12.892, that gives us 12 NQ points at $20 a point. That's $240 per contract traded. So this was a logic alert. Now, if you scroll up to the previous NQ alert, which I'm going to do right now so we can talk about it. Now, the previous NQ alert, which came out yesterday afternoon at 7:47 p.m. Eastern, was to be short 13.032. So let's go find that. 13.032. $13.032, and it dropped to 21. So that's about a $200 per contract move. Then we got back above the trigger, triggered again, back above the trigger, triggered again, back above the trigger. Now when red and falling goes to blue and climbing, not so interested in that trigger because this is a short alert, so we want the support of red and falling. Blue and climbing is kind of like driving into a brick wall. So we trigger, we have a couple $100 per contract per trade a few times here. Then we catch this one that drops to 1303. No. Yeah. 13,003. Then we get back above the trigger. And this one takes us all the way down to the one you just asked about. So this one from 13,003 to 12,903. That's 100 points, $20, $2,000 per contract traded. Thanks very much for the question. Anytime you ask a question when I'm displaying live charts, that's an opportunity for you to take the engine apart, put it back together again. Every time you roll up your sleeves and get actively involved. Trading is not a spectator sport. Sometimes when people are trying to learn a foreign language, they just go hang out in a country. Like me, when my wife and I first started going to Mexico, when we started Mission La Gracia, I never really tried to learn Spanish. I just thought, just by being there, I would absorb it, and one day I would speak Spanish. Apparently my pores were clogged because I never did absorb it. I still can't speak Spanish. If I had taken the time to go to a few classes and then learn a couple of words a day, enough years have gone by, I would probably be pretty fluent in Spanish. But because I failed to become actively engaged in the learning process, still a gringo. Still need somebody to interpret for me. Shameful. Okay, now, William asks, with a stop loss of $300, when should we exit a trade? Can we exit with a profit of $100? Because in that NQ chart, most of the trades offered about $100. You never want to risk more than the potential profit. Which means if you're going into a trade with the idea that there's only $100 of profit available, like 2 points on the S&P, then you can only risk 2 points. However, in this example, we can see that if price continues to fall, ultimately we go to the weekly trading zone at 1294, which is exactly what price did. In fact, we flew through 1294. We pull back to the BBC, and now we got support again at 12,954. So the maximum you want to risk is $300 based on market structure, using the three-step methodology that I teach all of our traders. So if you become a CFRN member, if you become a passport holder, remember that's the only thing we offer, because it includes everything we do today and tomorrow. We don't have any upsells. Once you become a passport holder, that's a lifetime all-access pass to the live room every day, to the indicators, to the workshops, all the alerts, everything. We will not hit you up for money again. That's it. It takes a lot of pressure off you and me, because I don't have to be trying to sell you all the time about some new crazy awesome indicator that I discovered, quote unquote. That just insults your intelligence, and we don't want to do that. We're building a community of like-minded believers and traders, and you'll experience that yourself when you tie into the discussion group on Telegram. Most of the trading and investment chat rooms and forums on the internet are usually pretty bitter, broken places because they're filled with people who are constantly losing money because they keep buying stuff that doesn't work, and they don't have anybody to teach them how to use the stuff if it did work. We are very much hands-on with our training. But no, we can only do so much. It's when you ask questions like you guys just did right here. It gets me excited, it really does, because I love to teach. I learn the most when I'm teaching. I can sit here and stare at charts all day and probably not have a new thought pop into my head. But the second I stand up and start teaching, it's like it opens my mind for more information. So in that 3-step methodology that I teach our traders, you're going to start with one chart. If you can't find the stop, you're going to go to a different chart. You're going to take 3 swings to find a place that allows us to risk a maximum of $300 per contract, per trade, less when possible. Now, once you go through the 3 steps, if you cannot find a suitable place to put your stop based on what the chart tells you, then you wait for it to trigger again. Because, as we just discussed, once an alert triggers, there's an extremely high probability it's going to trigger again and again and again. All of our members have access to unlimited one-on-one mentoring. You get 22 hours of classroom instruction every week. And if there's anything that you can't get your arms around during those 22 hours of group instruction, and everybody has an opportunity, you can ask questions during those 22 hours. If there's something you still can't get your arms around, then you can book a one-on-one mentoring session with myself, with Michael, with both of us. And each one-on-one mentoring session is 45 minutes where we focus on whatever that one thing is that you have not been able to fully understand during the group training. Whatever you do, don't let somebody sell you a bill of goods where you're going to risk 10 points to make 2. Now, obviously, that's going to be profitable for a minute, but you're going to hit a stretch where you get 3, 4, or 5 stop outs in a row, and maybe you've been cooking for days, weeks, maybe even months, and that strategy is going to clean your clock, wipe out everything you've gained. So don't let anybody tell you that is bad math, bad science. Never risk more than the potential profit. Now, 80% of the time, price does what we expect it to do. 20% of the time, it doesn't. And each time it does it in a slightly different way. Did price go from 13,032 to 12,954? Yes, it went there and beyond. But like I said earlier, price rarely travels in a straight line. So it's trigger, 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 trigger. Then the big drop. Now a pullback. And the BBC, when we pull back to the BBC, we expect that to be good resistance till proven otherwise. So price didn't have a chance to even get back above the trigger. And so when you understand that you've got this alert sitting here and this alert down here, and you see this pullback here, getting short on the open of this candle at 12,994, which took us down to 969. Beautiful, beautiful window of opportunity there. Even if you just carved out this little piece right here. Okay, let me look back in the chat box. When should we exit with $100 or wait? Well, you learn over time how to read the chart. There's no crystal ball. There's no algorithm, indicator, oscillator that's going to tell you, oh, this move is only going to go $100, or this move is going to go $700. You have to be in tune with the chart. You get to choose who you want to be as a trader. Do you want to try to get all the points you can in the course of a day? Or do you want to be the trader who just comes in and gets 2 points a day? 2 points a day in the S&P can earn you all the money you want to make. You start out in the simulator until you learn the strategy. That means you put together 10 consecutive days in a row where you reach your goal, 10 trades or less. Only then do you go live and trade real money. Once you go live, your goal now, trading one contract, is to increase your account balance by $2,000. Once you increase your account balance by $2,000, you use that profit to add a second contract. Now the same 2 points a day are making you 200 a day. And when it's time to add the third contract, the same 2 points make you 300 a day. And when you add the fifth contract, 500 a day. And by the time you earn the right to trade 10 contracts, always adding, only adding additional contracts with profit you earned in the market. When you earn the right to trade 10 contracts, the same 2 points is now $1,000 a day. It's $250,000 a year. Puts you in the top 3% of wage earners worldwide. And trust me, if it were easy, everybody would do it. Trading is not easy, but it can be simple. Most places try to show you how complicated it is, and that's why you need their help. We actually try to show you how simple it can be, and we say that's why you need our help, so that you can get away from this endless line of vendors who line the street to Wall Street. You know, the dark alleys, the back alleys, the dead-end alleys. You know, they open their trench coat and go, look at this indicator I got here, just discovered yesterday, right? Such nonsense, such an insult to your intelligence. So you can go that complicated, very expensive route that ends you up at our doorstep anyway, trying to learn how to trade. I have so many students right now who've spent $10,000, $20,000, $50,000 on training, and when they come to us, they have a pretty good working knowledge of markets, but they still don't know how to trade. And I'm very happy to say, I feel blessed to be able to say, that if you go into our discussion group right now, you'll find lots and lots of our traders, and they'll share their experience. They're happy to share their experience with you because they're happy for a change. They're actually on the profitable side of the equity curve. Now, I wish I could promise everyone financial success in the markets, but today, it comes down to your ability to take the information and the tools and bear good fruit. There's a couple things you have to bring to the table that we can't give you. Patience, self-discipline. Those are two things you got to reach down inside of yourself and find those. And there's a couple of concepts you got to wrap your brain around. This is a business based on probabilities. No one can know the future with certainty. God did not give man that ability. Not even with the machines, not even with the algorithms. There's no algorithm out there that's right 100% of the time. It's not possible. Now, here's where most new traders run into trouble. They exhaust all of their time and treasure trying to figure out a way to never get stopped out. Professional traders know that's not possible, so they waste no time or treasure on that search. They simply learn a definable edge, which is what we teach. Our strategy and our indicators equal a definable edge. And then you deploy that definable edge when the market offers you a high probability, low risk trade setup as defined by our strategy. And as Valerie mentioned to you in the chat box, book a one-on-one mentoring session with me, and I'll be happy to go into more detail with you. Our members have unlimited access to one-on-one mentoring. 9 out of 10 new traders will fail. That's a fact reported by Futures Magazine back in 2006. I started trading futures in 2005, and then that article was published in 2006. And, super. Anyway, 9 out of 10 was such a staggering figure. I mean, I couldn't think of any profession where 9 out of 10, 90% fail. Not doctors, not lawyers, not Navy SEALs. Nothing has a 90% wipeout rate. Well, doctors and lawyers and Navy SEALs have teachers. They have instructors. They get hands-on training. They have to roll up their sleeves and cut up cadavers or argue in a mock court or hold their breath underwater for a really, really, really long time. But yet with trading, all you need is a few grand to open an account, $20 to buy yourself some business cards that say trader, and what you've just bought is a license to commit financial suicide. It's like handing a kid a sack full of razor blades and tell him to go play in traffic. It cannot end well. It almost seems like it should be illegal, but it's not. So it's the low barrier to entry that causes so many traders, new traders, to fail. If you want to be a doctor, you know you got to go to school. You want to be a dentist, got to go to school. You want to be a plumber, you got to get some training. You have to be an apprentice. You want to be an auto mechanic. Now, you can learn to be an auto mechanic by hanging out in the garage, asking a lot of questions, carrying the wrenches, washing the oily rags, because pretty soon, whoever you're apprenticing for, he's going to say, boy, come over here. Take this tire off this rim. First time, it's probably going to take you half a day. And all the old guys in the garage, they just laughing at you. Ah, look at him. But pretty soon, you pop that tire off that rim. And pretty soon, they're not laughing at you anymore. And pretty soon, when they come back from lunch half drunk, you've already taken that carburetor apart, cleaned it, fixed it, put it back together, and the engine's purring like a kitten. That's my story. I'm sticking to it. If you want to become a part of this family, we'd love to have you. Go to eminifuturestrading.com. You can be on board when Globex opens tonight with charts, indicators, access to the alert channel, everything you need. If you've never taken a trial with us before, now, we're not looking for professional free trial takers, all right? You get one every 6 months, 2 per lifetime, and yes, we do check your IP address. But if you've never taken a trial, then we, with open arms, invite you to come and take the trial. For an entire week, 5 days, we will treat you just like you were a member. You'll have access to everything we do, including the one-on-one mentoring sessions. At the end of a week, you'll be able to make a well-informed, intelligent decision if what we do is right for you. If not, we shake hands, part company, and wish each other the best. If you decide what we do is right for you, welcome home. All right, let's go to our good word for the day. And I think I caught all the questions. If you put a question in the chat box and I didn't see it, repost it, and I'll be happy to take another run at it. Last week we were talking about unanswered prayer. Why do some prayers go unanswered? We talked about it for 4 days. I think it was. We're gonna keep after it a couple more days, because this is really important. Because especially if you're a new believer, you kind of feel like, okay, I laid down my life, I gave up smoking and drinking and cussing, or I'm trying to. So now life should just be a bed of roses, and I've got a magic key to the kingdom, and all I got to do is ask God for stuff, and He'll give it to me. You might want to check that preacher. Day 5. No, I'm sorry, we're on day 6. Habakkuk 2:3. Habakkuk, one of the least preached about books in the Bible. But there's a scripture in there that is probably my favorite scripture in the Bible. It's one that I try to remind myself. When the barn's empty and there's no crops in the field, things don't look so hot, I will still praise the Lord. See, when you're on the mountaintop, the refrigerator's full, there's gas in the tank, money in the bank. Woo-wee, it's easy to be a man of God. Thank you, Jesus. But see, life's not just about mountaintops. Life's kind of like a roller coaster. You go up, and then you go down. And then you go back up. So the measure of a man is not defined when he's on the mountaintop. The measure of a man is defined when he's in the valley. Now, the good news is if you're in a valley right now, there's a mountaintop coming. And if you're on a mountaintop right now, just know there's a valley coming. Speaking of mountaintops and valleys, before I get into this, I need to show you this. Because this is about hills and valleys. Okay? We talked back last week about this gap here. Okay? What a massive gap. This is Bitcoin Futures, on December 24th. The session closed at $23,670. That's $23,670. And then on December 28th, we opened at $26,650. And then on January the 8th, put in this massive long-legged doji. That right there told you, this is a daily chart, that told you a pullback's coming. And if balloon climbing doesn't hold, then what do we expect to hold? What do we hope holds? The BBC. Just want to refresh that chart. There we go. Now, am I forecasting that Bitcoin is going to $28,000? No, I'm not going to forecast it. I'm just going to tell you it's a possibility. Okay. Now, here, everybody was like, oh, man. So the market has answered your prayer, your hopes and dreams. But now that we're in a retracement, now that we got this big red angry daily candle, many people are filled with fear, afraid to buy. You wanted it, you got it, what are you going to do with it? And I'm not judging anybody. I'm just talking about the human condition. In case you haven't noticed, I'm very human. Okay? So, the daily BBC, which is our best indication, I mean, this pullback held, This pullback held. The pullback holds more often than it doesn't. Does that any guarantee it will hold this time? Nah, sorry. Wish it was, but it's not. So let's throw some fibs on this thing. Go from the low to the high. Now somebody out there is going, wait a minute, did he just jump from the S&P to gold to crude? Now he's on Bitcoin. He's using those same simple indicators? Anything else is just confusion. Now I'm not saying there's not other ways to trade the market, and I'm not knocking the other indicators. The stochastics, the MACDs, the trend, the tricks, the advanced decline, they all do what they were created to do. We just don't use them. I have too many voices in my head telling me what to do to, in addition, have a bunch of indicators and oscillators on my chart arguing, screaming at each other, go short, go long. So Michael and I used to be the king of many indicators. We owned everything you could buy, and when we couldn't buy it, there was nothing left to buy, we started rolling our own. We were both certified trade station developers. And we were always one mouse click away from greatness. Just one more filter, one more thing, one more something. Thank God we finally realized that we were always going to remain one click away from greatness. So we started peeling stuff off till we got down to the basics, till we could actually see price. And that's when everything changed for us. That's why many of you are able to trade consistently and profitably today, because of the experience Michael and I went through in the wrong direction. Thank God that he gave us some clarity. All right. So we've already cooked through the 24% retracement, the 38% retracement. We're approaching the 50% retracement. And even if the BVC does hold, which it holds more often than it doesn't, we expect it to hold, but it's no guarantee. We could come down and spike it. That would show something that was $42,000 2 days ago, $27,000. That's almost cut in half. You with me? Okay. Now, I know you've heard this before, but this time it's different. Why? I'll tell you. And I don't know what's going to happen next. I can't predict the future. And I won't hire anybody to write clever ad copy to convince you otherwise. This time, or the first time, the Bitcoin ran up to 20 grand, it was retail traders. Remember, the world still had not accepted the idea or the concept that this thing called cryptocurrency was actually a real thing. In fact, when I first started talking about it on this radio program in 2011, one of our regular listeners typed in the chat box something along the lines of, "You're a spawn of Satan. How dare you? God called you to lead these people, and now you're talking to them about this foolishness." You know what? With Christian love, I said, you can always turn the channel. I wasn't encouraging anybody to do anything. Nothing I do or say on this program is a solicitation to buy or sell anything. It's for information. So what I'm trying to do is encourage you to do your own due diligence, embark on your own path of discovery, so that you can make your own intelligent decision. So the first time we ran up to 20,000, it was retail speculators. Nobody knew if this thing would even exist. When we were talking about it in 2011, most people probably didn't even think it would be around in 2012. Much less 2021, but here we are. So what's different this time is that it's not just retail speculators. This time there's institutions, governments, banks, central banks, all types of financial institutions that are a part of this move up. Now, are the miners due to take a profit? Absolutely. Now, for those who follow in the Telegram channel where I talk about these things, I've been saying, guys, we got a big shakeout coming. We're overdue for a retracement. Retracements, excuse me, are what keep a bull market healthy. So, is 28,000 as low as we go? I don't know. Could we find support and then spike down to the 62%? We could. Could we revisit the low of this leg down to 1,700? Yeah. Would that be more than a 50% retracement? Yep. So, this can either freak you out, or it can serve as the buying opportunity that you were wishing you had. And I'll leave it at that. There's so much more to talk about. I could go on, but I won't. Also, talking about not being a solicitation to buy or sell anything, I had the pleasure of speaking yesterday afternoon with the chairman of the board of Santa Fe Gold. Those of you that own Santa Fe stock know that it got delisted last week or the week before. A press release was put out to notify all shareholders that it had to do with some accounting issues, and that the quickest way to fix the problem was to delist, file a Form 10-K, and then relist with a new broker-dealer on the over-the-counter market. And so yesterday, Brian, the chairman of the board, assured me that that is the plan. And he also talked to me at length. Now, keep in mind, he can't say anything to me in private that has not already been made publicly known. Let me say that again. As the chairman of the board of a publicly traded company, he cannot tell me any private little secret. He can't whisper in my ear and be a man of integrity. In fact, the telephone conversation that we had yesterday was recorded per SEC guidelines because he is running a publicly traded company. With that said, he wanted me to reassure all shareholders that he will do everything in his power to restore the company, to get the stock relisted, not just because he loves you very much, but because he owns, and this is public information, he owns 50 million shares of this stock. And he bought a whole lot of it at $1. So the man in charge has a vested interest in fixing this. Now, there's a lot of junior miners out there trading at $2, $3. They don't even have any gold or silver deposits. They're still in exploration stage. They're at their exploration stage. In other words, they got a couple geologists together and a guy that writes clever ad copy, and they created a company, and they said, boy, we're going to go out and we're going to find all these gold and silver deposits. We're going to be awesome. And because their marketing was so good, I'm not going to say the words pump and dump, but because maybe they will find something. Maybe one day the company really will be worth $2, $3 a share, their company. The difference between those companies and Santa Fe is Santa Fe already has the properties. God himself put the gold and silver in the belly of the earth. And because of prior management dropping the ball again and again, the filings with the SEC got delinquent. Now, Brian assured me also yesterday on the phone that not only will he do everything in his power to get this company back trading again and follow through with the press release that was announced, the deal with TMRC, where he's also on the board. Or no, that's a different guy that's on that board. But if you read the press releases, there's a strategic alliance with the TMRC. So he not only has a vested interest in getting the company up and running, he assured me that he will never, ever allow our filings to become delinquent again. Now, I've talked to a lot of CEOs and chairmen of the boards over the years of publicly traded companies. I'm pretty good at knowing when somebody's blowing smoke up my chimney and when somebody's being straight with me. And while I can't guarantee you anything, I really believe he's being straight with me, with you. And the next thing shareholders should look for, as per the last press release, is for the next press release to say that that 10K has been filed, that the arrangement with the broker-dealer has been consummated, and that the stock will return to active trading status on an exchange with a senior exchange with more visibility. So that's the deal. That's what happened. That's what's being done to fix it. And as I've disclosed to you guys here, I've owned company in this stock since it was ASCO Mining, 1998. I've been through so many ups and downs with this thing. When it ran up to $2, I could have retired, but I didn't sell any stock. I was convinced it was going to 5. What do they say? Bulls get fed, bears get fed, pigs get slaughtered. All right, I got slaughtered. Learned my lesson. I promise you, the next time it goes to $2, I will take half of my position off the table. That will make me whole and then some, and then I'll sit back and wait to see if it really can go to $5. Okay? All right, so that's the story on Santa Fe. If you have any questions, you can always email me or hit me up in Telegram. Oh, and once the 10K is filed, and once the broker-dealer deal is consummated, everything that was talked about in the last press release, when that's actually done, Brian agreed to come on here and do an interview with us on the show so that all shareholders, anybody who has an interest in the company, can ask questions and get answers. Okay? Peter, that company is called Santa Fe Gold. SFEG. If you look it up right now, you won't find anything because the company agreed to be voluntarily delisted 2 weeks ago because previous management had failed to file paperwork in a timely manner. So Brian has gotten everything current, and the company, there'll be a press release coming out that will give you a date when the stock will start trading again. Yeah, Todd, I can do that. All you gotta do, hang on, come back. Just go to any browser, type in BTC. It'll quote it to you in US dollars, 31,679.30. And the chart we had up, the futures chart. There's a new futures contract out there that doesn't have an expiration date, which is interesting. So the futures are at 32,295, and spot is at 31,679. You're welcome, Peter. Mike, at what price? I'm not sure. Mike, you say at what price? Flesh that question out so I can answer it for you. Oh, what price will it start trading at? Again, I don't know the future, so I assume we'll pick up where we left off. That's my best guess. And that's really all I can give you. I certainly don't think we could come back at a higher price. When the press release comes out that says this has been done, this has been done, this has been done, and on this day we're going to start trading again, it's very possible there could be some heavy buying that comes in and pushes it up, but I don't want to promise that. I don't even want to intimate that's going to happen because I don't know. But I do think everything's going to be okay. So we'll see. Again, I've been in this since the late 90s, so I've developed the patience of Job. Back to our good word for the day. Obstacles to answered prayer. Habakkuk 2:3 says, "For still the vision awaits its appointed time. It hastens to the end. It will not lie. If it seems slow, wait for it. It will surely come. It will not delay." Before leaving this study on obstacles to answered prayer, let's be clear about one thing. Some of our unanswered prayers have been answered. And the answer is, wait for it. But because we don't like the answer, we keep hoping that God will have a change of heart. The truth is, God won't change his mind to accommodate us. So we have two options. We can keep complaining, or we can start cooperating. One sounds like a path of least resistance. When the prophet Habakkuk needed an answer to his prayers in order to give direction to Israel, what did God tell him? Wait. Habakkuk 2:2. Write down the revelation and make it plain on tablets, so that a herald may run with it. Though it linger, wait for it. It will certainly come and will not delay. Now, I'll be honest, when I started this series on unanswered prayer, or obstacles to answered prayer, I had no idea that what we're talking about today, Part 6, would fall on the day that I actually had chosen to talk about Santa Fe, but I guess God really is in control. And God works according to his plan and his schedule, and he won't be rushed. When you try to get ahead of him, you always end up in trouble. Abraham did that. The result was Ishmael. That's when Abraham's troubles really began. Other times, God answers our prayers and says, no. He knows what you can handle and when you'll be ready to handle it. And he won't give it to you before then. In 2 Corinthians 12:8, Paul said this, 3 times I pleaded with the Lord, but he said to me, my grace is sufficient for you, for my power is made perfect in weakness. Instead of delivering Paul from his problem, God used it to develop him. Without his thorn in the flesh to counterbalance his great talent and potential pride, Paul wouldn't have been nearly so effective in the service of God. So, if you're dealing with unanswered prayer, maybe back up and listen to what I just said again, and then think about it. Think about it. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.